Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, we are obviously slicing through support zones like a knife, a hot knife through butter. You can see obviously this one, well, to be honest, this one did try and hold us a little somewhat, and then obviously we lost this one pretty sharpishly. But at present, at the moment, we are getting a bounce from this one, from this pretty much line in the sand before obviously we have the trapdoor opens up. So obviously it is good to see a bounce here. What we need to do is get back above this roughly 33,500, get back above this area, and then at least we then potentially can have a couple of supports before the trapdoor. But yeah, that is what we're working on today. Obviously it is a turnaround Tuesday, so we all know what happens on turnaround Tuesday. the markets turn around. So yeah, maybe we just get this bit of a relief bounce today. Maybe it does get rejected. Maybe we don't get above 33,500, and then yeah, we come back down and then yeah, just go deeper on our adventures in Goblin Town. But yes, the main driver is going to be this esteemed asset here, not specifically this one, but just equities in general. You can see they are also at a very important level. An important level for themselves before well, to be honest, Goblin Town for these guys is probably below we probably call it 3700. So they are not quite as close, but obviously this area is pretty important. Because if we don't hold here, then it does bring 37,500. So 37,500. It does bring 3,700 as the next target, and then obviously if we trade below there, then who knows how deep we can go. But yeah, so all eyes on this today. I mean, it's pretty obvious now that the Fed has done its job. It has caused all sorts of problems in asset prices, which is going to bring down inflation. Maybe it's not going to show up on the statistics, the latest statistics or the ones after that, but it will start showing up later on in the year. So yeah. If we do want to have a look at the 10-year, you can see the 10-year is somewhat easing off here. Nothing major. Obviously got to get, I mean, there's this level here we've got to get below initially where you can actually see we bounced off already. Bounced off once already. But yeah, if we can get off there, if we can get below there, then yeah, potential level here, then where we can get supported, but ultimately we need to try and get below, and then probably an area we'll draw in about here, where ultimately I think if we get below there, then we could put in the top. So this is probably just based on looking at this chart, the main area for this 10-year yield to get below, before we can then obviously see some easing off in this. The DXY hanging around at these highs. A lot of macro experts and actual macro traders as well. So not just the people that just wanna talk fundamentals, but people looking at the charts. They are kind of thinking that this 10-year is about done here and is gonna start to come back down. So that could potentially be good, providing obviously it's coming down based on inflation coming down, and not obviously coming down based on people flooding into the bond market as obviously a de-risking. But clearly that hasn't been working for a while now, so that probably isn't the knee-jerk reaction that is going on at the moment. Ethereum Satoshi parent had a bit of a bounce here into our support, into resistance again. Could this be it? Could the market potentially recover here and Ethereum really get going? We shall see. Obviously the USD pairing is a bit trashed. We'll just extend this along. So didn't quite get to quite get down to this level. But yeah, trying obviously to get back above some of these levels. I mean, realistically, well, yeah, realistically, it's about 2,900 before this can potentially look okay, and we are clearly a very long way away from that at the moment at present. So gold similarly pretty much in the support area, not doing too good, but providing it gets supported here, providing it doesn't get back below 1840, then yeah, I would still err on the side of bullishness for this asset. I mean, we are close. If we get below 1840, then there could be obviously a lot of selling from people that were buying this area and accumulating here. They could suddenly decide they need to dump, and then, I mean, realistically, targets well, initially 1780, maybe even down into the 1600s. So yeah, it could be wrecked. Oil back down into this range. This was the kind of range I was mentioning. I expect us to stay in unless something crazy happens. Crazy as in, obviously, we get we do enter like a proper bad recession, in which case we will drop below, or obviously there's an increase in the conflict, in which case we'll go above. But it does seem for the time being that 90, yeah, so basically anywhere basically between 90 and 110. 110 is about that $20 range is probably about fair value for oil at the moment. So obviously, until something changes, then yeah, I think we will spend the majority of the time trading there. What else to look at? Yeah, not much else really to look at here. Not much else. I mean, we can look at stochastics. That are obviously going to be pretty much done. I mean, we are eyeing up some of these larger time frames to turn up, but like we keep saying, what is the price value of Bitcoin? The price of Bitcoin going to be when it does turn up? Because obviously, just picking any point. Any obviously price level is not the best way of doing it. You kind of have to wait till it turns up and then see what the price level is. So 4 hour looking to turn up from a low level here, 8 hour looking to try and turn up from a low level here, or turning up from a low level here, 10 hour. These aren't so relevant. These are more relevant just for short-term moves, which you are getting a bit of a short-term one now. But these have only just turned up from the low levels, so we could, like I said, we could get up towards that 33,500, then get rejected there and still be very bearish. But obviously, we've then got a shot of getting above that and then potentially having a bit of a better recovery. 12 hour looking to try and turn back up. Daily still pointing down though. 2 day still obviously just about pointing down. 3 day looking to turn up at some point, and 5 day diving, well, obviously bi-weekly, looking to try and bottom out. So yeah, like I said, if this 10, 12 hour and daily can get us basically above this 33,500, get us towards 36, then we could be looking at this being the low. But obviously, we all know that saying, the trend is your friend. The trend is your friend. I know a lot of people are looking for one big massive capitulation candle, but I mean, this in the context of obviously the wider base of people that are involved in the crypto market, and then the potential lower volatility you would expect from Bitcoin at this point in time, this could be a bit of hope in here, viewed as a capitulation candle. It obviously just didn't come straight down because there was a bit of resistance, because there is obviously still there are some people that will DCA into this, and like bigger players like countries, for example. I know they are tiny tin pot republics, such as what is it called? Whatever it's called. They are obviously buying like their 500 coins. But all I would say is that there are obviously people that they are buying dips that we never did used to have buying dips. We didn't have countries, even if they are just El Salvador or the Central African Republic. we didn't have countries buying into Bitcoin, and no doubt there are going to be other players buying in as well. So yeah, this could very likely be the capitulation candle. It just had a bit of resistance. So in much the same way that the percentage, the volatility will be decreasing over time in this asset, also the actual steepness of the pullback of the actual capitulations could slightly decline as well. So if you kind of look, this has obviously moved a little bit across rather than straight down. You guys get what I'm saying here. So a bit of hopium, this could be the capitulation candle, and then yes, this could be it. Around $30,000 could be a level that a lot of people have been eyeing up. There could be decent support there. Obviously back over to stock markets, it seems like the Fed has done enough. I mean, if it wants to collapse asset prices even more, they are then gonna basically have bigger problems when they have to stimulate again, and we end up then with obviously higher inflation with rates at a lower level. They will really be in trouble at that point. The trouble that it probably looks like they're in at the moment, with obviously limited things they can do, they basically will have nothing they can practically do unless they are gonna swing rates negative, which a lot of people are pretty adamant the US won't do. So yeah, here it is. We did tip into that 4K handle. We are only having a very weak bounce here. This does need to accelerate. We do need a turnaround Tuesday. It does need to feed through into a bigger bounce, and that bigger bounce then needs to take us back to all-time highs, and then we can all live happily ever after. But yeah, on a serious note though, watch out below if we do obviously take this low out again, this support level. Obviously watch out below if we take this out in Bitcoin. Yeah, pretty risky markets at the moment. But could you argue that this was a capitulation? You could argue that. Time will tell. Time will tell. That's all I can say, guys. So yeah, remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.